Bitcoin is about to blast past its all-time high, and what comes next might just rewrite everything you thought you knew. What's up guys, this is your guy JC. Let's get straight to the point. Bitcoin recently bounced off its 98k bottom and has been climbing steadily, but this brutal 110.6k wall remains unbroken. Price nearly tagged here at 110.6k, but actually got rejected at 110.4 and pulled back to 108k level. And now, if your only take is 110.6k is resistance, congratulations, you're playing like a normal retail trader. You, me, even your neighbor or that random guy on the street sees this. This market rewards precision, not noise. Elite traders don't just see resistance. We ask why and we read the psychology behind it, and we decipher what market makers are doing. And if you're watching this far, I want you to show some love. Please hit like and subscribe. It really fuels my motivation to keep dropping videos with top level insights. So let me break it down on a Bitcoin daily chart. There are three clear phases playing out with Bitcoin's price action. 1. Post all-time high pullback, 110.6k in focus. 2. This 109k wall, the market maker's intentional move. And number 3, the third attempt, still no touch, still no mercy. So let's start with number 1, post all-time high pullback, 110.6k in focus. So Bitcoin hit a new all-time high at 112k, then pulled back, and the next peak after the all-time high was at 110.6k. So after this 110.6k high, there was a little bit of correction, but price railed again, but this time it never even touched this 110.6k level. It only climbed to 109k level here. So price did rise, but why did it stall at 109k instead of pushing through 110.6 right here? This is actually pretty simple, because that 110.6k level is filled with stop losses from trapped shorts. And market makers know this. They knew exactly where the stops were. So instead of triggering them at 110.6k level, they stopped just short of 110.6k level, keeping the shorts alive on purpose. And 3 weeks on, price approached this top again, but this time it turned down from 110.4k, which is another intentional hold. And this pattern, it's a psychological conditioning. By repeatedly failing to break that 110.6k level, market makers are programming traders to believe short near this level can't lose. Y'all understand? And when that belief is ingrained, boom, they will strike. And when that resistance finally breaks, they will squeeze hard, not holding back. And I'd say this is short position roulette. Whether you're in from the start or cannot help but just jump in late, you are likely to get cleaned out. And meanwhile, long traders are watching and thinking, oh, I missed the break of 110.6k. Should I take profit? Or I don't want a reversal. Maybe cash in now? I mean, sure, they've been holding winning positions. But trust me, market makers are ready to eat even those profits. Once longs start trimming massively, they'll absorb that supply, then push price even higher. Then what's the key takeaway here? So around that 110.6k level, short entries count as sell pressure, and long take profits also count as sell pressure. And yet, despite all this massive sell pressure, price is still holding up around 108k level without any major breakdown. What does this suggest? This suggests a strong intent to break through that level, which means even just a touch of 110.6k will trigger a wave of short liquidations and stop losses. And when those liquidations take place, they now act as buy pressure, not sell pressure. That's how a short squeeze gets set up, and once it's triggered, the move can explode upward. Also, there's one more key factor worth noting, which is the USDT tether dominance. For those unfamiliar, the tether dominance measures the percentage of the total crypto market cap that is held in USDT. And here's the important part. It moves inversely to Bitcoin. That means when USDT dominance rises, Bitcoin price tends to fall. When USDT dominance drops, Bitcoin tends to rise. Let's take a look at some recent examples. So on June 23rd and June 9th, the tether dominance, USDT dominance dropped over 4%. So here and here. And at the same time, Bitcoin surged more than 4% in response. So that would be here and here. And on June 12th and June 20th, USDT dominance climbed and Bitcoin, of course, declined. And from a technical analysis perspective, there was a fake out where it looked like it would break out of the channel top. So right here, there was a fake out, but it quickly re-entered the channel. And according to standard channel theory, when a fake out fails and price re-enters the channel, it often travels to the opposite boundary or even breaks through it, which kind of looks like what's happening right now, right? I've mentioned this concept in my past videos as well. It's one of the more reliable patterns used by many traders in technical analysis. So right now, the USDT dominance is pushing down on the bottom of the channel. If it breaks down below this lower boundary, the inverse correlation suggests a strong probability of Bitcoin price pushing higher. You can actually see the same thing happening on the current Bitcoin chart as well. There was a fake out below the channel support. So right here, there was a fake out. But now it has re-entered the channel and is attempting to break through the opposite upper boundary. Oh, wow, then if Bitcoin is clearly about to skyrocket, I should just go all in on a long, right? Rookie mistake. Trading isn't about hope. It's about discipline and execution. Make no mistake, this may be the setup for a surge, but you never know. Surprise geopolitical news or a big macro shocks can swing price temporarily. So I'm keeping my downside scenarios active even if I think they are unlikely. And even if that happens, I've already mapped out my moves for the downside scenario. Just revisit the previous video. And I want y'all to come back and watch this video in a week or a month. You'll see how the pieces fit. And this is when the real, wait, who the hell is this guy moment hits. And if you enjoyed this and want more no fluff analysis, hit subscribe and like. Your support keeps this going. And remember, your encouragement fuels my drive to keep delivering top tier insights. And I really want my subscribers become part of the few who survive in this market without ever getting played by the market makers. Let's go crush the next one. I'll see you in the next video.